Okay. So starting with the who, what, when, fix it now. The what, it's a worksheet. And the when, remember that there's extra words that need to be added. Anytime we have a document that says, that has net income, we need to show what period it's covering. So for the month ended, April 30th, and we'll use the current year. Okay, now really all you need to do is write every account title down and the number that matches it, and it's giving you all that in the book. It's whether it's a debit or a credit. Okay? So we'll start at the top. Cash. Cash has $4,900 for a debit. Petty cash. $75. Accounts receivable. The Whittle. Wydell, I don't know. $13.87. Supplies. $228. Prepaid insurance. $375. Okay, there's all of our assets, and then we'll move on to liabilities. So accounts payable, Southside Supplies. And so that will be a credit balance. Connor Whitney Capital. So we only had the one accounts payable. Now we're moving into owner's equity. I think I'm going to have to abbreviate. C. Whitney Capital and C. Whitney Drawing. $7,443 and $1,700. Okay, so that got us through all the balance sheet accounts, right? Assets, liability, owner's equity. Okay, so just remember that these are balance sheet accounts. And then we had income summary. And we haven't used income summary. We really haven't talked about it. But it's there. It's not going to have any numbers just yet. But it will. Okay, and then we'll start the income statement. So that's revenue and expenses. So sales is revenue, right? And sales are $2,160. And then all of our expenses, advertising expense, cash short and over, insurance expense. Supplies expense. Oh no, miscellaneous expense. Then supplies expense. What kind of order are all these expenses in? Alphabetical. Remember that. And utilities expense. Okay. So this group right here are the income statement accounts. And then 4,600, 6, insurance expenses empty, miscellaneous expense 189, supplies expenses empty, and utilities expenses 550. Now remember when some of you were trying to post, you were trying to post into insurance expense or supplies expense when you're supposed to just put it in prepaid insurance or supplies. So once we go through this adjustments process, you'll kind of see what we use those accounts for. Okay? And then, so that was step 2. Get all the accounts from the chart of accounts in. Step 3, bring the balances from the ledger. So all these numbers came from the ledgers, right? And then step 4 is to total those 2 columns up and make sure that they equal. Now you need to go ahead and go through this process to make sure that you wrote everything down right. Okay, I know you're just copying the numbers. So, we know all that these numbers are correct, but you need to make sure that you wrote them down correctly. Because again, if you flip 2 numbers or slid it left or right, then everything else over here is going to be wrong. Okay? So go ahead at this point, add those 2 columns up, get your calculators out. Okay? So we need a single rule. Okay, and then put those 2 numbers there, and if they equal, we'll give it a double rule. Jen, I'm going to ask you what your number is. That one? You add fast. Is that equal?
Yeah.
All right, Chandler, what's the number? 9870, is he right? Okay. So 9870, 9870, and the equal, so we can double roll. That's good. We know our ledgers are correct. All right, so now we're going to go on to step number 5, which is to plan the adjustments. Okay, and remember that just because we do them here, this is not an actual permanent accounting document. Remember, this is in pencil. We can wad it up, throw it away when we're done. So we have to make sure we get these in the journal later. Okay, that's why the word plan is there, because there's nothing official when we do these columns. It's just helping us to get through the rest of the process. You have to make sure you journalize those at some point. Okay, so the adjustments, again, are what's been used up. Okay, so if you look at the end, well, before we're going to go see what our adjustments are. But the reason that we need to update things at the end of the month or the end of the fiscal period or the end of the year is because we need to use the accrual basis of accounting. And that was some vocabulary, right? You may remember what that definition was? Somebody that did it today? Accrual basis of accounting versus cash basis of accounting. Okay, so basically it's reporting expenses when they're spent, recording income sales when it comes in, keeping it within that same fiscal period. Okay, it's also the matching revenue or expenses with revenue, which is one of our accounting concepts, and that's one of our GAAP rules that we want to use the accrual basis. We want to keep everything in the same time frame. Okay, if we spent it this month, we want to record it this month. Okay, if we sold it this month, we want to record it this month. We may have sold it, but we don't get the money for 2 months. Well, I'm not going to wait until I get the money to record it as a sale. That's the cash basis of accounting. Okay, we're going to use accrual basis of accounting. Now it also talks about materiality. There might be some companies that can use cash basis of accounting, but only because the difference between the two wouldn't make any difference. And I really don't have a good example of that, but really we need to work on accrual basis. Okay, matching revenue with expenses. So that's why we have to do adjustments, because we need to keep all the accounts up to date. So I talked about on Friday where all year long, all of our transactions, we bought supplies. We bought supplies for cash, we bought supplies on account, we kept putting them in the cabinet, but they're supplies, they're things to get used. It's paper, it's ink, it's pencils, it's pens, it's Post-it notes, whatever. Okay? And so at the end of April, okay, because we're working on the month, we need to go into that cabinet and count and compare that to what we started with, what we've bought, and figure out what the difference is. What's been used up in the month of April. Okay, and that's our adjustment for supplies. We're also going to do prepaid insurance. Now, we started prepaid insurance a long time ago. So let's say that in January, we're going to pay for 6 months of insurance. We're going to pay $600, $100 a month for 6 months, right? But we're going to pay it all up front. It's prepaid insurance. So when we get through the month of January, how much have we used up? We've used up 1 month of that time frame, right? So we've used up $100 worth of insurance coverage. Okay, and then we go through February, we've used up 2 months, 3 months, 4 months, and so on. Okay, so the value of our insurance over those 6 months is going to have to be decreasing, because it's not $600 in January and in March or April. Okay, because we only have a few months left of coverage. Does that make sense?
Wouldn't it be going up because you're paying more towards the insurance?
Well, we paid it all at the beginning.
Oh, it's prepaid.
Yeah, it's prepaid. Okay, we're not paying it each month, we're decreasing it each month. Okay, so we can see that the value of our prepaid insurance, what's left, is $250. And so we need to see what we started with, what's left, the difference between the two is what's been used up, during that time period, okay? And that's our adjustment. All right, so, and I'm on page 168 now. So we are now in 6.2. So it says, analyze the following adjustment information into debit credit parts. Record the adjustments on the worksheet. So supplies on hand, $75. Okay? So we have $228 worth of supplies in our ledger. Okay? And it tells us that there's $75 left. Supplies on hand. So what's the difference between those two? 228 minus 75? 153. Now this is a debit, and I need to decrease the amount of this. So what will I put here? A credit of 153. Okay? All right? And we're going to label these. So this is A, because we want to be able to match up the transactions later if we need to come back and look and fix.
Did you say it was a credit?
Oh, I did. Put it in the wrong spot. Thank you. Good catch. Okay. Okay. Now for this column, if you remember back on the notes, I said we must have one debit and one credit. Okay, so if this is our credit, we must have a debit in here that matches it. So where would it go? Take a guess. Debit, but where? Which count? Which count? Which count? Supplies expense. Supplies expense. Okay, so that's where we're going to come down here and use this one. All right, so 153 in the debit side, and we'll still label it A. So if we had a bunch of adjustments, it'd be easy to go find the A's, the B's, the C's to be able to match them up. Okay, so that's why we need to put those in there. So we have one debit, one credit. Okay. Now the next one is the value of prepaid insurance. So on April 30th, the value of my insurance is $250. Well, we paid $375 is prepaid. So the difference, say it again, 125. And if I'm decreasing it, again, this is a debit, I need to decrease it with a credit of 125. Okay, this is transaction B. And there's my credit. I have to have a debit. Which count? Insurance expense. Okay, so 125. And we'll label it B as well. Okay, and that's all the adjustments. It says to total and rule the adjustments column. Okay, so number 6, step number 6, we're going to total it, make sure that they equal. Okay, not a big deal when you just have those few numbers, but real world you're going to have a lot of adjustments. Okay, so 153 plus 125, 278. Okay, and they're equal, so we're good. All right, so just to add some extra notes in here, most of the time we're going to calculate to get these numbers. We have a beginning, they're going to give us the ending, so we'll calculate the difference between the two. And remember that you must have one debit and one credit. Okay, step number 7, we're extending the balances across to the appropriate column. So that's why we went ahead and marked these balance sheet statement, income statement accounts, so we can come over here and get them to the right columns. Okay, and I don't know why they put balance sheet over here when it's on the top. Okay, you just have to remember we're going all the way over here to balance sheet columns. Okay, so we're extending it. So we just look, 4,900, there is no adjustment. We'll take that debit and we'll move it all the way across. 4,900. Okay, petty cash, same thing. There's no adjustments. 75. Accounts receivable, no adjustments. Okay, supplies, we do have an adjustment. We have a debit. There's our credit. Subtract it. The result is $75. Okay, and it's a normal balance of a debit, so it stays on the debit side. Okay, prepaid insurance $375 minus $125, $250. Okay, $267 is going to come out to the credit side. There's no adjustments. Capital and drawing. Okay. All right, so now we're going to do the bottom half. We're going to the income statement columns. Same thing. We'll extend it across. There's no adjustments. It goes in the same column. If it's a credit here, it's a credit here. Okay, advertising expense. Cash short or over. Okay, so here we get to insurance expense. There is nothing, but we do have the adjustment. Okay, so we're basically still adding those two, 0 plus 125. Bringing that number over, then 189, and then the 153. Okay, and then we'll need to total and each of these columns. Okay. Now again, go through that math real quick. These are not going to equal. Huh? Oh. It's always nice to have good checkers. 153. Is that what it is? Okay, and 550. Okay. Now add all those columns up, get those numbers across the bottom in that next row. But we're not finished. So just get the totals there. And then we'll talk about how to finish this worksheet out.
Are the 125 and 153 not supposed to be in the credit side?
No, because they were here as an adjustment debit.
Okay.
Yeah.
Oh, we're almost up. Oh wow, we're recording. There you go, put this on YouTube.
Add them up. No?
Oh yeah.
Add them up.
What did I adding up again?
Each column. Add every column. Okay. Anna, do you have the total for the income statement debit side?
Yeah, I got 1,483.
Okay, 1483. Everybody agree?
Yes.
Yes. Okay. Ethan, you have income statement credit side?
2,001.
2160. Okay.
What? Darn it, I got.
And Hannah, the balance sheet debit?
I'm still working on
Okay.
Got 8,387. I did that wrong. That's right.
8387, that's right.
Oh, that is?
8387. And Logan, you have balance sheet credit?
7710.
7710.
Okay, yeah. No, I was just thinking about something.
Okay. All right. So now what I want you to think about is that income statement or net income. Revenue minus expenses equals net income. Okay? So revenue is sales, and then these are all of your expenses, right? So if we subtract these two numbers, as long as the sales are larger, then the result is net income. Okay? And that's what we're going to find on this line right here. So over here, we'll label it as net income.
Net. Nothing but net.
Okay? We're going to subtract these two, and we're going to put the answer on the smaller of the two sides. Okay? So 2160 minus 1483 is what? 677. And we're going to put it on the smaller of those two sides. 677. That is our net income. Okay? Huh? For 1 month? Maybe depending on the business. I don't know. If it's just a small...
I don't know if that's a good thing.
But yeah, I'd like to make more than $677 in a month. There's a lot of things that have to happen with that, right?
Well, I guess that's good for a business.
But that is after all the business expenses come out too.
Oh,
Okay.
that's a profit.
So same thing over here with balance sheet. The balance sheet
What do you know? They equal out.
is assets equals liability plus owner's equity. But what I also need you to note is that owner's equity includes net income. The owner kind of gets that little pot of money that it goes under their capital account. Okay? So now we'll take these two numbers and subtract them. 8387 minus 7710 gives us 677, and we'll put the number on the smaller of the two sides. 677.
677.
Okay. So for this number, we're going to subtract and put number on smaller side. Okay, then we'll add up these numbers. What's 1483 plus 677?
2160.
2160. We just bring down 2160. Do those equal?
Yeah.
Yes, so we're good. And then 8387. And 7710 plus 677 is
8387.
83. 887,
It's so hard.
and it all equals. Okay?
You did it. That's the most stressful. At least you don't have, at least like all that is just in one assignment.
Okay. So we wrote down over here that this is net income.
Oof.
You could have a net loss. If your expenses are more than your sales, you would have a net loss, right? So if we subtracted these two and we put it on the smaller of the sides, it would go right here for a net loss. So just kind of a side note, if these numbers are inside, it's a net loss. If they're outside, it's net income. Okay? So the outside two, that means it's net income. If these numbers end up on the inside, that means it was a net loss, and we would have to change this label over here.
That's pretty sad.
Yeah, and then we have to start rethinking about our business a little bit. Okay?
Yeah.
So outside, big, fat, net income, inside, skinny, lean, a loss. However you want to visualize that or think about that.
We're done.
Okay? So that's a worksheet. So now we would be able to keep moving, which we will after this chapter, to preparing our financial statements because we have all of our numbers, we have our net income, and we can prepare those documents for the world. Remember, this is temporary. Nobody's going to see this. We're going to throw it up, wad it up, throw it away, because we're going to take these numbers and we're going to put them on those official documents that the world can see. Okay? Any questions on that?
Nah.
Again, these two must equal 677, 677. Okay, and that's on your notes page. Good? All right.